Well, while things have begun to stabilize, it was an uneasy couple of weeks for the U.S. financial sector after two of the biggest bank failures in American history. We're happy to welcome back Kristin Afelumo with her planning to talk through this and what you need to know. Thanks for being here.
Yeah, of course. Great to see you again.
Oh, yes. Okay, so this is a hot topic. What would you say led to the collapse of these two major banks?
Sure. So generally speaking, banks make their money a couple of different ways. One of them is when we deposit money into the bank, they take that money and invest it. As interest rates have increased over time, their clients likely had a higher need to have the cash to make purchases, not use credit, etc. And as they started to withdraw more and more money from the bank did not have the funds on hand and had to sell off some of their investments. And so as the news went out that the bank was selling off investments, the patrons of the bank got nervous, started calling their friends, and then started taking all the money out. And so banks don't, if you walked into a bank today, they don't have $1 billion in the bank.
Right.
They have it all invested. And so with poor investment decisions, we see a bank, SVB, as we all know, who's gotten themselves into a little bit of trouble.
Right. And so when you think about this, obviously it impacted a lot of people. What is being done as a result of this? I know there's a lot of people that may be concerned about this in the future.
Sure. So this bank was in a unique situation in that many of their clients had assets or money in their accounts over the $250,000 limit that the FDIC insures. And so a lot of people that have maybe less than that, maybe have never considered what the FDIC even does for them. Basically, banks pay almost like an insurance policy on your money so that in the event that you go to the bank and your money is not there, the federal government will step in and make sure that you get your cash. And so I've seen a lot of questions from clients lately about how can I protect my money? Is it even safe to have money in the bank?
What would you say about that? Do you think that people should put their money into the bank and feel okay about it?
Absolutely. You definitely should keep your money in the bank. We don't want any more runs on the bank or everyone trying to withdraw their cash at once. It's completely safe to have your money in the bank up to the FDIC limit, which for most accounts is $250,000. If you have a spouse or a partner on an account with you, that limit doubles, and the limit is per your relationship with that bank. So if I have 5 checking accounts, the total amount of coverage I have is $250,000. So if I wanted more coverage than that, I could do something as simple as opening an account at a new bank. But I really would recommend, if you've got more than $250,000 in cash, you should talk to a banker or a financial advisor like myself. We can give you some really clear direction on where you can put money that has higher FDIC insurance limits. I work with a lot of clients whose accounts have $2 million of coverage. And so things like this, they're not really concerned about. And also, if you have $250,000 plus in cash, it's likely you could be making some investment decisions with that money that are still relatively safe and not going to stress you out too much.
Lovely, great information that I'm sure a lot of people at home can use. Thanks for joining us, as always.